How's it going, chumps? This is Chump Change Trader. I am about to do day one of my 0 DTE strat for the small account challenge. Approximately 3,931 and some change in terms of what's in the small account, and we're going to be trading the SPX. So it's currently 9:23, 7 minutes away from bell opening. And first things first, I like to look at the weeklies and then kind of zoom in and hone in as to what are my levels. So before you sort of decide to pick a direction, you need to know sort of what the trend that we're moving in. And as you can kind of see on a weekly, for the past, I'd say, 1 week, we've been kind of grinding a little bit lower on the SPX. The sort of the way in which this widescreen looks like, it's kind of exaggerated and scrunched up. If you want to just sort of see what that looks like on a normal perspective and like normal aspect ratio, that looks like on a, let's see, chart. We want to do 1 week. In this case, I can only do 2 weeks. That's okay. So, using this aspect ratio for the SPX, the SPX on a daily looks like it's grinding lower. This is the monthly on the corner over there. This is a 2-week look, but if we just focus on sort of right here, we've mounted some higher highs in the past couple of days, and then we're just kind of sort of leaning over right here. This is just a squeeze indicator at the bottom. I don't have a MACD or RSI over here, but generally, you know, looking at this is kind of like a blown out view. Let's not do a 5-minute candle. Let's do an hourly or 2-hour candle. There we go. That looks better. So that gives you kind of the idea of sort of where we've been at for the past, let's say, 5 days. We just sort of been consolidating and sort of staying in this range in the past 5 days. So if we were to say, okay, where's the gap between the last 2 candles? That's kind of where the levels are. This blue line right here is a 50-day simple moving average, and down here is a 200. So where this 50-day moving average is kind of roughly where the gap ends. So I'm gonna set an alert down here, and then set an alert at the top of that gap right there. Or right here, actually. And then from here, I will basically put an alert at the highs of that week. So this is kind of like my 3 ranges right here. If we now start zooming in a 3-day perspective, yeah, that does kind of look good to me. It makes sense in terms of the ranges. Now let's focus on the day in itself. And pre-market, let's see here. This is since SPX is not like the ES, we can't see what's going on in the pre-market. We can only see just between intraday. So let's just kind of take a look in terms of what was happening during the aftermarket and the pre-market. And it looks like it gapped up in the pre-market, but we're still range bound. So if we do the same 3-day, yeah, that would be the same high that we were looking at. And then the low that I had set down was roughly around here. So yeah, we're literally smack dab in the middle in terms of that range on the ES for the pre-market, what we're doing right now. We look at today, and then zoom out. Those lines that I drew, they're not present here. This is today's high. This happened just before 8 a.m. And then we're like smack dab in the middle. In terms of economic news that the market could move off of, durable goods were down. So not surprising there. People were buying less appliances, less refrigerators, less long-term stuff, because everyone's maxing out their credit cards. So now what we need to do is basically just let the market in a couple of minutes open up, give us kind of a look in terms of what's going to happen, and see sort of where we're at. So where the SPX, right, it only trades intraday, closed down here, the futures market shows that the SPY, practically the S&P 500, is trading right in the middle here. So what I'm gonna do is let the first I would say 30 minutes play out, and then essentially figure out where the trend is for the market upon opening. And a lot of the times when the market opens, we typically have, it's not uncommon to have two movements, right? Market opens and it's heading in one direction, and then it changes direction, and then that's your trend for the rest of the day. And the key word is the day, because when we're trading SPX on the 0 day, we have to essentially decide and pick, a strategy or a leaning. And so that's bell is our indicator that the market is indeed open. And so let's take a look, see. We got 1 minute candle, and then looks like a nice big fat red candle, and we're just gonna let this play out. And so again, with the 0 DTEs, you can see the liquidity starting to pump in. People are placing their bets. Here's the volume. Here's the open interest. So there's plenty of people basically trading it. So there's no concerns in terms of liquidity. And there's really three directions, right, that you could pick where the S&P 500 is gonna go, whether it be up, down, like bullish, bearish, or neutral. And since it's been trading range bound right at the pre-market, potentially we may be able to be range bound today too. Of course, doesn't change if there's any economic news that could happen midday. You have to factor those in as well. Investing.com. Let's do economic news. Muted open. So even news covering expects that today is just going to be muted, which is great, because then that's telling me, hey, perhaps then we're looking at a what's it called? A inside day, as they call it, which basically means a neutral day, where it's not going to move up a lot, it's not going to move down a lot, and that is ripe for an iron condor strategy for this day. And we'll manage it at noon time once we put in the position. Economic news calendar. Investing.com. And so, let's see. Durable goods was down, all that information. Housing price index. So, housing prices month to month, it went down a bit. So that's good. That's what the Fed wants. We got some Fed speaker. Consumer confidence. This is a big one. This is in 27 minutes. So remember what I said, that the market could move one way. It's 9:30 right now. It could move one way for a half hour and then totally flip its script in another half hour. I'm actually going to pause this video and then come back to it in 27 minutes, and we're going to see the dramatic change, or if there's a dramatic change, between when this number is released and when what the current trend is right now. So right now we're kind of seeing a 1 minute candle. Let's see what a 3 minute looks like. Yeah, it's really not easy to see on the SPX right now because we're looking at it with just data of just like a couple of minutes, literally 3 minutes of data. You're not really going to be able to concern from any of that. If we take a look at ES instead and then look at today's data, you can kind of see that right from the opening, really not much movement at all. Just consolidating right here. Yeah, it may be puking right now, but I bet you it's going to hit VWAP, which is this orange line right here, and then it's going to stop short of it and then just kind of ride along it as VWAP rises. So yeah, so we're looking at a snapshot right now. Price is currently, at least for the SPX, 5,073.60. Keep that in mind, and then we're going to use some video editing magic, and we will be back in 25 minutes or so. All right, welcome back. It is 10:03 and we have the numbers out. Consumer confidence for February is 106, so lower than the anticipated and lower than the previous. So that's bad news, but good news in terms of the scare of the idea that inflation is going to be running rampant, right? So, but remember, that's consumer confidence, is not actual hard data. In terms of how the market is reacting to that, let's take a look at the SPX. Remember what I said before about that in about a half an hour's time period, the direction could move on you like a drop of a dime. I'm going to stretch this out. It looks less severe, but when you scrunch it up, it's definitely more severe. So earlier in the morning, as soon as the bell opened, we basically grinded all the way down to 5064.13. I told you to remember that number ahead of time, and I remember it now. And it just basically grinded it up right into that number release. And then sort of we're kind of like consolidating in this particular area right now. So what does that tell me? It tells me that the market potentially doesn't have a very strong feeling about this particular economic situation. And maybe they'll probably grind lower to sort of match this level right here. So I'm going to set an alert there, and then I'll also set an alert for today's high. So now we have sort of like an established level as to what we would need to do. Let's go ahead and look at the mechanics of the actual trade. I think this is okay to go ahead and execute what I said before about trading on an inside day, which would be a iron condor. So let's go ahead and look at the option chain. I'll blow up the numbers so it's easier to read. And the mechanics behind sort of the typical Tasty Trade analysis that was done for their iron condors was a believe it was a $20 wide spread iron condor, or was it 10? I forget, but I think it was 20. Let's go with 20 for on the safer side, since we don't want to blow up this account right off the gate. So this is the at the money line right here. We're going to go $20 wide, which is 80 right here, 60 right here. So that's actually 40 wide. Is it 20? No, $20, right? Okay. And then now we want to do, again, we can choose, and so to do a either 10 or $20 wide wing. So if we do $20 wide wing, we actually have a higher P&L percentile or profit margin relative to a $5 or $10 one. But the $5 or $10 one makes it safer, but simultaneously, since we're going to manage this accordingly, and we are already establishing a pretty wide range to begin with, we aren't really concerned about sort of like getting the position to move too far away from our profit target because we will close it immediately, basically having a stop loss. So let's just do right now a $10 wide wing and take a look at what that profit profile looks like. And here we are. It's going to be about $460 versus a $500 loss, so a 1-to-1 ratio. And our break even will be 555, 5,055. 5,055 is somewhere. Let's zoom out. Let's look at a 3-day. So you can see sort of we're at that bottom part of that range that I set up earlier. So 5,055 lands pretty much right inside this zone right here. So this right here is a support level from both in the weekly and from today. So that's what I like to see there, is there's confirmation on that side. The upside though, if we rip incredibly high, there is no protection there, or at least not as much protection. But since we know that the news isn't like, oh, this is the greatest news ever, and there's Rip City kind of momentum, I think today we can safely say we can still go with this type of trade. So let's do 465 as our hit. Or if we want to just keep it safer and try to conserve capital, because I believe this is a $500 buying power, you know what, we can still go with this, and then if we need to adjust, we can adjust midday. So let's just go with that for the time being. Try to capture some theta along the morning until the midday. We've already lost an hour, so let's see what we can do here. And if we just basically grind sideways, you know, as I'm predicting right here, or sort of kind of noticing trend-wise and participating on that trend-wise, is that this is like an inside pattern, right? There's no rips to one way or another. It's just kind of consolidating, getting tighter into this pattern, and that's what we want to see. And so as time goes on, we're going to lose value, so I'm going to have to, you know, quell my expectations and lower my price target just so that I can participate and get a fill. Come on, fill me. If not, I'll just go ahead and take $5 less, and we are filled, and we're off to the races. So now we just basically have to wait and see, and come midday, you'll see sort of the progress going in from there. I'll catch you on the next one.